tool in addressing those costs, specifically insurance recovery. With right strategy, insurance policies, some that could be dating back decades, can provide critical funding to help manage the financial burden of those claims and remediation. However, the path to recovery is not always straightforward. And to help us understand and navigate that, we have a couple of experts. But before we introduce them, I would like to turn it over to a friend and colleague, Paul Fuller, the CEO of Allied Public Risk, who will be moderating today's session. Paul, I'll turn it over to you.
Yeah, thanks, Vlad. Hello, everyone. This is going to be an interesting discussion. There's a strong correlation between insurance recovery and insurance archaeology as it relates to PFAS. Insurance recovery is distinct from insurance intent. Insurance recovery, it's all about plausibility of coverage, and that's an important distinction because the newer policies, and I'm talking the last 20 years, they're not designed, there isn't the intent to cover PFAS. And so you need an advocate that can argue the ambiguities because in insurance law, a tie goes to the policyholder. And the correlation with insurance archaeology is important because PFAS is a manifestation type claim, spans decades, and you need a methodology to retrieve these older policies. And it's these older policies that should be coverage rich for this type of claim and litigation. So our speakers, they've got expertise in these areas. I'd like to first introduce Joe Saka. He's a partner in Nossaman's Insurance Recovery Group in Washington, D.C. He's a dedicated advocate for commercial policyholders, and he leverages his extensive expertise to resolve high-stakes disputes with insurance companies. I can confirm that Joe's formidable. And you should keep his contact information. He's got an ability to navigate complex insurance disputes. We've got Richard Janis, who is the founding principal of Los Angeles-based Arsena Risk Group, which is one of the leading insurance archaeology and claims consulting firms in the country. Richard is a licensed attorney and practitioner on mass tort and complex claims. But here's what's remarkable. He's got the expertise in insurance archaeology. That's great. But he has recovered billions in historical insurance policies for his clients, and he understands and has fluency in the public sector. So our structure will be Joe starting us out. He'll then transition to Richard. I'll then jump back in. We'll have our question and answer session, and then Vlad will finish things up with his final remarks. So Joe, floor is yours.
All right. Thank you very much for that very warm introduction. And there's a lot of places where we could jump off from, but what I find to be most interesting is we'll start in 1998 in Cincinnati, Ohio, when a corporate defense attorney gets a phone call from a farmer in Parkersburg, West Virginia. And the farmer tells him that his cows are dying and he suspects that it has something to do with the nearby DuPont chemical plant. So the attorney goes and he visits the farm and he's shocked by what he sees. He sees hundreds of dead cattle, their organs with strange tumors, blackened teeth, and patchy fur. And then he notices some white foam streams. And as he investigates, he uncovers a larger story. He discovers that a chemical called PFOA that's used in the production of Teflon has been detected in the local water supply. Now, PFOA belongs to a class of chemicals called, you guessed it, PFOS, polyfluoroalkyl substances, which are a family of chemicals used since the 1940s to manufacture stain-resistant, water-resistant, and non-stick products. And they're widely used in common consumer products that are up there on the slide, everything from food packaging, outdoor clothing, carpets, leather goods, cosmetics. And they're known as forever chemicals because they're extremely resistant to breaking down in the environment, meaning that they can persist for decades after their initial release. So at the time, the potential environmental and health impacts of PFAS were not well known or understood. They had been a topic of scientific discussion for decades, but there was still a lot of uncertainty about their long-term impacts. So in 2001, this attorney in Ohio files a class action lawsuit on behalf of about 70,000 people in West Virginia and Ohio that had been exposed to drinking water contaminated with PFOA. And after years of tooth and nail litigation, he reaches a settlement. And as part of that settlement, DuPont agrees to fund a comprehensive study to investigate the potential health effects. And the study that's known as the C8 Health Project begins to create a very clear picture of the potential health impacts of PFAS exposure. And it's linked to several health conditions, including certain cancers and thyroid diseases. And what's scarier is that as scientists begin testing for PFAS more widely, they realize that it's everywhere. It's in the blood of nearly every American, it's in the water supply of millions, and it's in wildlife across the globe. And so this sparks a broader conversation about how to manage these chemicals, which kind of brings us to today. And if this sounds like it could be a movie, it's because there was one made about it. So in preparing for today's presentation, I came across this quote that was in the New York Times from a plaintiff's attorney, and he said that liability from PFAS could dwarf anything related to asbestos. And I want you to think about that, because when you hear that comparison, and when I hear that comparison, it's just amazing how significant that is. I mean, for asbestos, we're talking about claims that stretched over decades, impacting nearly every sector. Billions have been paid out. Litigation has stretched on for years. It's taken multiple name brand businesses into bankruptcy, and it's still far from resolved. So I didn't begin practicing until 2007. So in my 17 years of practice, you would think that these claims would be resolved by now. But I've dealt with insurance claims related to asbestos exposure going back as far as the 1960s. Whether it's exposure from decades ago or newly discovered risks, these issues continue to persist. And kind of same story with environmental pollution, where coverage is going back to the early 1900s. And we've seen how these legacy issues that we think are behind us play out. And it's a worst case scenario, but PFAS has the potential to play out in the same exact way. So with the environmental and health impacts just beginning to surface and the litigation only now starting to ramp up, the breadth of potential claims could be staggering and span generations. So let's be clear, the legal issues over PFAS are not entirely new. In fact, they've been unfolding over the last 2 decades. So after that initial settlement from the class action in 2001, there have been numerous other legal actions related to PFAS, and they've been surging in recent years. So in South Carolina, for example, there's a multi-district litigation that comprises 60,000 claimants. DuPont was named as a defendant in more than 6,100 lawsuits from 2005 and mid-2022. 3M has been named in more than, or was named in more than 3 PFAS lawsuits per day in 2021. But there's a very unique aspect of this as it relates to water organizations, which is how water organizations can find themselves on both sides of the V, acting as both plaintiffs and defendants in these cases. So this dual role is quite unique. So as plaintiffs, water companies obviously can seek recovery from manufacturers and suppliers who introduce the chemicals into the environment. And indeed, water companies are trying to recover billions in costs incurred to clean up contamination, upgrade water filtration systems, and meet the evolving regulatory standards. But as defendants, they're also being sued, including by municipalities and property owners, alleging harm from contamination linked to water supply. So from an insurance perspective, what really adds an additional layer of complexity here is that when you're thinking about the costs that are potentially going to be incurred, be it the cleanup cost, be it the cost to defend claims, you need to not only be considering your own insurance policies, and that's current and historical insurance policies, which will be a significant topic for today, but also the insurance policies, both current and historic, of the parties responsible for the contamination. And so you're going to want to evaluate policies that may apply to third policies, and it's going to require a lot of effort to dig deep into not only your own coverage history, but the coverage history of insurance available to manufacturers and suppliers. And so I'm not blowing smoke. The cases that have been filed already have resulted in major settlements. So there was a major settlement by DuPont and 3M with public water providers that really demonstrates the massive potential scale of the potential liability. So DuPont settled for $1.185 billion this year. 3M is estimated to pay out $10.5 billion to $12.5 billion between now and 2036. So this is in those cases, it's an instance where the target companies had deep pockets and were able to fund that level of a settlement, but that's not always going to be the case. So you're going to be looking at insurance as a potential recovery source. So we have a growing wave of lawsuits by a variety of plaintiffs, lawsuits by individuals alleging personal injury from PFAS exposure, lawsuits brought by water organizations seeking to recover costs, and lawsuits by states and municipalities trying to hold companies accountable for contamination. But it doesn't end there. So we've known for a while that this issue was going to be coming to a head because the EPA had already proposed some regulations last year. But just within the last few months, the EPA decided to regulate PFOS for the first time. And there were two major developments earlier this year. First is that the EPA introduced MCLs, which is maximum contaminant level, for 6 PFOS compounds. And this is the highest level of a contaminant that is allowed in drinking water, which for PFOS is going to be measured in parts per trillion. So with strict limits as low as 4 parts per trillion, these levels are going to carry significant costs. And you all know better than me, but you understand what a massive undertaking it's going to be to meet these requirements. And as I'm sure you know, a threshold issue is that at these levels, it's even difficult to test for PFAS. So it's going to lead to significant disputes regarding whether our water supply is in compliance. And then the second major development is the EPA designated PFAS as a hazardous substance under CERCLA. And so this has the potential to profoundly impact several aspects of the Superfund landscape. So it could, for example, spur the designation of new Superfund sites, but it could also result in substantial costs at existing sites, including new site investigation and remediation. And if actionable levels of PFAS are discovered at these sites, it may reopen allocation among potentially responsible parties. So all that brings us to the core of the discussion is that when these lawsuits are inevitably filed, they're going to implicate insurance, but you need to know where to look. And here's the key. It's not going to be in one place. So as one example, I help clients get insurance for cyber losses. And when we do that, we don't just look at cyber insurance policies. We're also going to look at, for example, property insurance policies and crime insurance policies. So likewise, for PFAS claims, you're going to look in a few places. Now, the main place that you're going to look, and this is going to be our main area of focus today, is your CGL policies, commercial general liability policies. And these are foundational for claims associated with bodily injury or property damage due to PFAS. And what's unique for these is that as opposed to claims-made policies where coverage is dictated based on when the claim is made, these policies typically are going to provide coverage based on when the injury or damage occurred, not when the claim is made. So this is really crucial for PFAS claims because they may arise from exposure that occurred decades ago. And the strength of older CGL policies is going to be particularly important because prior to the mid-1980s, the older CGL policies lacked a pollution exclusion. And so kind of consistent with what Will was saying, there was not the intent under these policies not to cover claims like what we're seeing. Another source for coverage is going to be your environmental pollution liability policies. For more direct environmental risks, these policies typically cover liabilities from contamination and pollution events. But one potentially important distinction is between sudden and gradual pollution events, because many pollution liability policies are only going to provide coverage for sudden and accidental pollution events and exclude claims arising from gradual pollution and may not reach PFAS claims. One other point on CGL policies that I forgot to cover, and that is for new policies, we are seeing broad PFAS exclusions added onto them. And no matter how creative I am, it's going, if a claim is truly seeking damages for property damage or bodily injury from PFAS, it's going to be very unlikely that you're going to be able to get around those exclusions. Another potential source of coverage is D&O insurance. D&O policies provide coverage for claims alleging wrongful acts, which is a broadly defined term. And while these policies commonly include limitations for bodily injury or property damage, you're going to want to review the scope of the claim versus the scope of the exclusion to see if there's an argument that there's claims that fall outside the scope of the exclusion. So what are going to be the major issues? Number one, unsurprisingly, there are going to be a few key exclusions that come into play for PFAS claims. And the first of these is the pollution exclusion. And it's really important to understand how policy forms have evolved over time and how specific language of these exclusions vary widely. So before 1970, early CGL policies, they lacked any specific pollution exclusion. And so these are potentially going to offer the broadest potential coverage for PFAS liabilities. By the 1970s, the sudden and accidental exclusion was introduced, but you really need to understand how courts interpret that form of the exclusion in your jurisdiction, because that's what's going to be most important. Post-1985 policies typically feature the total pollution exclusion, and these are going to present obstacles, but not necessarily insurmountable ones. So, for example, there was one case where the lawsuit alleged bodily injury from exposure to PFAS-containing products, which the court found at least required the insurer to defend the claim because it was an environmental pollution. A second exclusion that we might see asserted is the expected or intended exclusion. However, I think policyholders are going to have a strong argument that there's a lack of intent or for those exclusions to apply because insureds typically didn't have precise knowledge of the consequences, and that it was only recently understood and known what the effects of PFAS could be. In addition, in some states, such exclusions are not going to apply unless the insurer can prove that the insured acted with the intent to cause the actual harm. So that's a very high burden. Another key issue is going to be the trigger of coverage. And so we talked about how CGL policies are written on an occurrence basis. And because PFAS claims often involve exposure over multiple years, it's possible that multiple policy periods and multiple policies are going to be triggered. And when insurance is triggered for a PFAS claim is going to be a much more complicated analysis. And it's going to vary depending on which state's law applies. And there are four main approaches. One is the exposure trigger. And under that approach, the policy is triggered when the claimant or the property was exposed to the harmful substance. A second first becomes apparent or, quote, manifests. Another trigger is the continuous trigger, and this that might be the most favorable to policyholders because it's going to trigger coverage continuously from the time of first exposure through the manifestation of harm until the damage or injury is discovered. So, in other words, every single policy from when PFOS entered the water stream in the case of a claim against a water company. And every single policy from then until the present is potentially going to be triggered. And then finally, there's the injury in fact trigger. And under that theory, coverage is triggered when the actual injury or damage occurs, regardless of when it was discovered or regardless of when it first manifests. So this raises one of the more interesting aspects of insurance law, which is that it's state law specific. So the exact same dispute can have a completely different outcome depending on which state's law applies. And this can and already has resulted in races to the courthouse where the policyholders rushing to file in one state and the insurance companies rushing to file in a different state. Allocation is going to be another issue. So when you have multiple policies triggered, in some instances spanning decades, the question is, how do you allocate coverage among the various policies? And there are going to be two primary methods that courts and parties are going to use to allocate coverage. One is pro rata, and one is all sums. And policyholders are going to be vying for an all sums methodology. So under that method, policyholders are going to be able to select any policy year that's triggered to cover the entire loss up to the policy limits. And once those limits are exhausted, depending on the state, the policyholder can either move on to the next layer or move on to a completely different policy year. Insurance companies, on the other hand, are going to be arguing for a pro rata allocation. And under that methodology, the total liability is going to be divided among all the triggered policy years. Generally, that's going to be based on the time each policy was in effect. And additionally, in some instances, it's going to require that the policyholder assume a portion of liability for periods when it was not insured or no coverage or no insurance is available, either because it's exhausted or because the historic insurer has gone bankrupt. So this is going to be a very complex and contentious issue with these claims. Notice is going to be another issue, and this is one that you actually have some control over. So immediate and proactive notification is absolutely critical. So as soon as you recognize that there's a PFAS-related claim or potential incidents, try to get that to your carrier. Try to identify the policy now so you're in the position to start providing notice. And it sounds straightforward enough, but I can't tell you how many of our cases involve late notice issues. And there are arguments that we have to respond to them, but it's costly and it's better to avoid the issue altogether if you can. So start thinking about that issue early. And then here's one that you're not going to have control over, and that's the scope of prior settlements. So for a lot of historic companies, this isn't going to be your first rodeo. You might have had litigation over environmental contamination back in the 80s or the 90s where you reached a settlement with your insurer. And you can definitely envision a scenario where there's going to be arguments by insurance companies that PFAS claims fall within the scope of releases from earlier settlements agreements. So this is another important aspect. when we think about insurance recovery for PFAS, it's easy to focus just on insurance policies, but you shouldn't lose sight of vendor agreements and other third-party liability contracts as a potential source of recovery as well. So many vendor agreements are going to include provisions that can be leveraged for PFAS claims, like additional insured provisions or indemnification provisions. And that could also be a critical source of recovery, especially in situations where you either can't locate your policies or your own policies have exclusions or limitations that bar coverage. Likewise, for indemnification provisions, this means that the vendor is going to be required to indemnify you for liabilities that arises out of their work or their actions. So if you can tie back contamination to the activities of a vendor or supplier, your organization may be entitled to indemnification for those liabilities, including the cost of remediation, the cost for any defense costs, and indemnification for any settlement or judgment. But to effectively pursue those avenues, it's really important to review specific contracts carefully, your historic contracts as well. So you need to be thinking about, are you an additional insured under anybody else's programs? Does anyone have the obligation to indemnify you?
3 minutes, Joe?
Yep. So I'll pass it over within then. So some key takeaways here. One, you want to consider timing and the location. When dealing with PFAS, it's really crucial to try to pinpoint when PFAS was used, when PFAS entered the water stream, and this is going to help try to narrow down which policies might be triggered and focus your investigation. Because if PFAS didn't enter your water stream until 1970, you don't need to be looking for earlier policies. 2, we talked about give timely notice. 3, you want to really try to identify other responsible parties that you might be able to pursue. In the event that you're getting a denial, I want you to take it with a grain of salt and understand that it's part of the insurance business model. Don't simply receive a denial and just check the box and say it's done. Try to address potential coverage disputes and view that as kind of the opening for a negotiation. And finally, and then I'll pass it on, review your historic insurance policies. It's going to cost a little bit of money. It's going to cost some time, but it's going to pale in comparison to the potential costs, damages, defense costs that are on the line. So with that, I'm going to pass the baton.
Richard, Dana, floor is yours.
Great. So I am Dinah Petronas. I am a colleague of Richard here at our Center Risk Group. Let me get the screen going. Assuming you all see my screen?
Yes.
Wonderful. Okay, so I'm the actual opening act for Richard Janish. Richard and I hail from Marsh & McLennan. We were colleagues there. Richard had built out a mass tort consulting practice for the West region of Marsh. And then in 2008, when Elliott Spitzer came down hard on all the insurance brokerages, we need to figure out what our next act was going to be. And then recognizing that we had a very viable niche offering, decided to break out on our own, and hence Arsena was created. And who is Arsena? It's in our name. It's an amalgamation of a number of the things that we do, the ARC in archaeology, the insurance aspect, and then the advocacy aspect, locating that insurance and then advocating on behalf of our clients. So we were speaking to the group before how we're really a lot of fun at cocktail parties because people are fascinated by what insurance archaeology actually is. And it's a disciplined practice of locating, researching, uncovering, and then restoring these lost or unknown policies to provide that claims coverage. And it's not just the indemnity element, but it oftentimes covers the defense fees, which depending on the type of claim can sometimes exceed the indemnity portion. And in the case of like a water district or environmental situations, it's the costs to investigate the damages. So I'm just going to just touch very quickly on, these are the industries that we serve. It's no one is immune from these types of claims that require insurance archaeology. So I just wanted to give you a snapshot of all the types of companies and public entities that we work with. So why would somebody need insurance archaeology? And it usually stems from a lawsuit or of a claim of some sort for a triggering event, and it's things that happened decades ago. Joseph mentioned how PFAS could actually pale in comparison to asbestos, but a lot of this stemmed from the asbestos claims back from the 60s and 70s. And we just recently attended an asbestos litigation conference earlier this month, and it's not slowing down really anytime soon. So really, it's any type of a long tail claim exposure. So environmental contamination as well. We worked with a number of public entities as well as real estate organizations where there's some sort of contamination. Opioids and pharmaceuticals. This has definitely reared its head over the last 10, 15 years or so. Of needing to find coverage, because in the case of opioids as well as talc, they're not just targeting the manufacturers. The plaintiffs bar is very aggressive, and they're going down through the entire supply chain. Excuse me. So it's the manufacturers, it's distributors, it's retailers, and in some cases it's even medical groups. Sexual misconduct has been a real active area as legislation has changed in a number of states where they've sort of opened up, that window by which victims can file lawsuits. So we're probably working with hundreds of school districts as well as public entities that have these foster care systems to locate historical insurance. And then of course now PFAS is in the forefront. And so we like to say insurance is an asset. And I took note of the term of being coverage rich. So and that's where we are. So with that, I will turn this over to Richard, because this is something we hear with pretty much every client. We've looked everywhere.
Yeah. Hi. Hello, everyone. Thanks, Dinah. We put this slide in just to kind of tell you how it all starts. Usually a lawyer like Joseph, or sometimes it might be the insurance broker, will tell the client that, for this claim that you're encountering, maybe you have historical insurance. And so oftentimes the client will go on their own and start looking around. And then they'll eventually realize that, we're not seeing anything. We got to get expert help and somebody with that skilled eye. And so we'll get the call like, we've looked everywhere. We don't have any records here at the office. So can you magically, Arsena, go find our insurance somewhere and get it to us? And so, and I put that there because internal records is going to be an important part of our process. And we do have a process. What we tried to do is distill it into a 3-phased approach here. And so the first thing we'll do is we have a diagnostic phase, an investigative phase, and then we also just pull the whole puzzle together at the end for purposes of a delivery to the client and its needs. But the diagnostic phase, oftentimes, a lot of this is driven by a claim. We have a few clients that are doing this proactively because they've been reading the paper and they know these kind of cases of PFAS or some sort are going to be coming, and they just want to get their house in order. And so we do that as well. But for the most part, it's because of a particular lawsuit that came in that has, historical insurance elements to it. So we'll ask them, typically in the diagnostic, we'll find out, what do you have? What did you uncover in your own efforts? And then we'll try to look at that documentation that was pulled together, and then we'll build a work plan. And that work plan will be, a scope of work to go through the various elements of that I'll get into more deeply shortly. Paul and Vlad wanted me to spend a little bit of time today, by the way, getting into the how-tos of archaeology, and we will do that. And so that we get into the investigative steps that we'll talk about. And then lastly, what we like to do, and we find clients find it very helpful, is to pull all this together into a schedule or a chart, so that for our board of directors or ownership or whomever, we can see how all this insurance fits together, this insurance asset, the primary insurance, the excess insurance, the specialty insurance. And so going into the claim, we can advise our attorneys, this is what our insurance asset looks like, and hopefully this will be the participating insurance for whatever the company or client is facing. Next slide. So the diagnostic approach or the phase would be to, like I said, tell us what you got, and keeping in mind, and this is important if you're looking on your own, don't just look for insurance in that sense, a policy. It goes much deeper than that. We work with a lot of times it's secondary evidence or circumstantial evidence of insurance. It could be a canceled check. It could be a journal entry in a financial statement. It could be a correspondence from past litigation where you had insurance participation involved, so a reference to a carrier. Those are the things that we would want to look for, the records that hopefully you would uncover, and it would be something that we can build upon. And then, of course, as Joseph said, try to understand whatever the claim is. Let's understand what the years of insurance needs are, so that we can, work smart and target the particular years. Some of our stuff goes back to the 40s. So if the 70s are important, that would be good to know, because in an archaeology plan, we're really transporting ourselves back to that time and place where the business, how they operated, who were the decision makers, how was insurance put in play, who touched insurance. And so it's not what you know today, it's really what was done then, and really understanding that and who the key players are and such is critical to this whole diagnostic step. And of course, from that effort, we might have some gaps or identify some periods of critical need, and that would be important to understand going into a work plan. Next slide. So the investigative approach, we have a work plan, and our work plan doesn't really vary. Like I said, we have a very disciplined approach here, and I can tell you that every one of these elements here listed has turned up something. You just never know what is going to be the primary key evidence that's going to solve the puzzle. And it could be so we cover them all, and then you just never know what's going to hit or be the primary the best result. But accounting and finance, always critical. So we've had dozens and dozens of projects where it's that department, those historical records that have references to insurance, whether they paid a premium on a policy, or there might have been some sort of a loss. The accounting department has a canceled check from a claim where the insurance company reimbursed the insured back in the day, and there might be a reference to an insurance policy number on it or something like that. So accounting and finance is one of the buckets that you want to consider in your search. These are all what also I wanted to mention too, in our investigative approach, we really like to start with internal records, which is this element. As I said earlier, sometimes the clients will say, well, we've looked everywhere internally, so go out there to other resources and find the insurance. We will consider third-party resources in our investigative plan, but we really want to make sure that we've turned over every rock internally first. And so in addition to accounting and finance, there's the legal department. Sometimes some of our clients have a department where there might be references or files for old claims or other situations where the law department got involved with identifying insurance that was in place at the time. Of course, the corporate records are important, the board minutes. For example, there's always drama with insurance over the decades where, our premiums went up and brokers go in and make presentations about a new book of insurance that they want to place the account with because of, the older carriers either, raised their premiums or is going out of business or something. So corporate books can be really helpful to understand, some of the aspects of insurance over the course of the life of a company. And then, of course, the deal books. If we have a lot of times in today's day and age where there was mergers and acquisitions in the past, and oftentimes the working papers or the deal books of those transactions would be a snapshot in time of the insurance. So we would want to look at those because that could be a lead. There might have been we were sold or we acquired this company in 1987. That deal book might have some insurance records in it or references that we could seize on. Also, as I mentioned, claims files and then contracts in general. There might be vendor contracts or certificates of insurance that we've provided to other parties or that we've had a file on referencing those certificates that we generated that could be evidence of insurance. Or they could be attached to a loan paper, for example, going back to the finance example. I've seen loans where the bank required a COI as part of the issuance of the funds, and so there might be paperwork in connection with a real estate property or even some sort of lease agreement. And then lastly, internally, former personnel, people back in the day that might be retired, that might have knowledge of the insurance or worked with the insurance. We'd like to understand who those folks are, and if they're around, or we can access, we can find them and interview them, and they might have a memory of who they dealt with when they were, running the insurance program for the business. Next slide. Outside research is also in our diagnostic approach. We include in this phase of our work broker research. A lot of times it might come out of the board books if we don't know, or some other paperwork, but who was the insurance broker at the time? Contact the insurance broker. They may have records still. And so we also, for some of our larger companies, they might have gone to London and done work with the Lloyd's of London. And we have access to the London market records that go back to the late 40s. And so sometimes going into those archives might reveal some, usually it's excess insurance with underwriters at Lloyd's, but those could be leads as well from the London market that could help fill in the picture. If we know some of the insurance carriers, I know there's a lot of skepticism sometimes, like, well, the insurance companies aren't really motivated to tell us that they covered us or not, are they? But sometimes if we have a good lead, and there's some carriers that have pretty good records. So if you tell me, for example, we think we were with the Travelers in the 70s and we have some circumstantial evidence of that, we work with all the markets. In fact, we do some of their insurance archaeology on occasion. So we could contact a particular carrier and ask them to run a search, and we can, because we work with that carrier, we can make sure they do a good job, a thorough review of the stuff that we're asking for. But they might reference their records and come back and say, yeah, we got a hit. We have references to an old loss run or some other premium payments or an underwriting file on this particular business. And so between what we have as evidence and what they come up with, we might be able to mutually come together on coverage. And then folks like Joseph, if we have to, we could put a loss policy agreement together and kind of recreate what the insurance was based on the insurance evidence that we've collectively pulled together. We also look in court records to see if there was any past litigation that involved insurance participation. Oftentimes old interrogatories are on file in the courthouse, or definitely, the law firm that handled the matter. And if it looks like it was insurance related or insurance participation was involved, we could contact that law firm. And a lot of times the law firms have those old case files, and they may be able to pull those records for us and identify the carrier. And of course, the workers' compensation bureaus we also reach out to, because back in the early days, like the 70s or the 60s, a lot of times the workers' comp and the general liability insurance were bundled. And so if we got a hit on the comp, more than likely they also placed the general liability coverage. So that's not so often, not so much the case today, but back in the day, a lot of these policies were sold as packaged policies, and it included workers' comp. And then lastly, auditors. A lot of times companies are audited annually, and the outside auditors come in. They usually look at the insurance. They cast some sort of opinion on it. And the good auditors actually, back in the day, would identify who the carriers were. They would list a schedule, like general liability was listed with this company with these limits. And they even would put the policy number in. The lesser good our audit reports would at least identify the coverages, like you had general liability coverage of $1 million with excess of 10 million, excess of the 1 or something like that. So that would be helpful, because it kind of tells us, it lets us know what we're looking for. But if we can, the audit books, we don't want to necessarily overlook them. And that comes out of the finance department as well. So oftentimes those audit books are part of the permanent records that are never to be thrown away. And so we ask for those. Then we pull it all together. We like to chart it all out. As Joseph mentioned, timely notice is important. Oftentimes, as we work in real time, if we find the insurance, we're going to work with coverage counsel, or we can work with the insured directly to just make sure that we perfect the notice to the appropriate market. Getting that claim noticed as soon as possible is very, very important. It avoids a lot of problems later on. So can't emphasize that enough. Lastly, this insurance is going to be very useful in any sort of settlement or litigation support situation. And so having it all organized, charted, identifying what this asset is going to be useful for the defense team in the underlying litigation. Next slide. I put this here because I'd like to just kind of show you how it all comes together. This is a case study last year. It's PFAS related. It's an airport. It's the firefighting foam that we read about. And what we did there is we did the archaeology for this airport authority. And it was the internal records that uncovered the insurance that we needed. And then we also, through the internal records, found the broker. And between what we found internally and what the broker turned up, we were able to cobble together the evidence for 3 insurance companies. And those companies we tendered to, and those companies are paying the defense of the situation right now. And those defense fees include the investigation costs. So there's a lot of, sample taking and working with the state agency to get ready for the remedial action plan. And all those costs are being covered by these insurers. One of the insurers has a pollution exclusion. And as Joseph mentioned, the other 2 insurers don't necessarily agree that the exclusion applies. So it's a hot topic. The scorecard, I think, is maybe 50-50. Pollution exclusions are being challenged in the PFAS arena, and this particular carrier is standing its ground on it right now, but the other 2 insurers are taking exception to it, which is kind of interesting. But we do have insurance participation in covering the defense of this matter right now, and getting ready to undertake the remediation at the site. 3
minutes, Richard.
Okay. Lastly, I just wanted to kind of bring it all together here in this slide, build a historical policy search in your strategy. Joseph already talked about the different kinds of policies to consider. I think another thing to think about here is the solvency status of your insurance asset. That's why it's so good to pull it together now, because some of these carriers aren't around anymore. And so you want to know where you got the good assets and where you have insolvency challenges that you're going to have to kind of allocate around. The next thing I wanted to mention is the burden of proof. The burden of proof that we have the insurance with a particular insurer starts with the insured. Most states will say that, begins with us. We have to, to put it in a nutshell, you have to make a prima facie showing the likelihood of insurance with a particular carrier. And so that's where the circumstantial evidence can come into play, where we can use it to at least make that prima facie showing of some of the essential terms. And those terms being, the identity of the carrier, the term of the limit, the term of the policy, and then the limits of that policy. Those would be some of the critical initial steps to meet that initial burden threshold. And then, like I said, lastly, pulling it all together and mapping it, I think, between what's insolvent, what's possibly eroded from prior claims activity, if we had claims in the past, and then also understanding maybe there's, as Joseph mentioned, we have situations where there's been policy buyouts or policy releases in the past because of prior claims activity. You want to know where those settlements are, and then you can map around it. The next slide. That's it. So want to thank again Paul and Vlad for the opportunity to speak to you all today. And I think if there's any questions, we have a couple minutes left.
Yeah, thanks, Richard. We'll do rapid fire. We've got 7 minutes here. If you don't mind, I'd like to jump in with a couple of questions on my own before we open it up. Richard, are there statute of limitations as it relates to state guarantee funds?
The state guarantee funds, yes, there are, in the sense that the state guarantee funds usually, once the estate is dissolved, there's pretty much, it's a place of last resort. And so they like to hang their hat on the proof of claim. So if it's a current insurance company that's going through liquidation proceedings, there's usually a bar date for getting a proof of claim in. And so you want to do that and work with the state agency in that regard. But if it's an old insurance company that went bankrupt years ago and it's been fully liquidated, you're probably out of luck. There isn't any funds, and the state agency is going to look to to see if a proof of claim was filed back in the day, and typically they'll deny the claim because there was no POC made at the time, which is kind of ridiculous, because how do we know we have a claim 30 years later? But anyway, Joseph, do you have any thoughts on that?
Just one very specific one, and that is, we're dealing right now with a claim involving Arrowwood, and Arrowwood is presently going through liquidation in Delaware, and there's a claims deadline of January 15th of next year. So if you have Arrowwood in your program, or if you don't know if you have Arrowwood in your program, be mindful of that and try to resolve that issue sooner than later.
Very important point there. Let me just mention, he's mentioned Arrowwood, but they're also known as Royal Globe or Royal Sun Alliance. So Royal Insurance, the old Royal Insurance is going through that proceeding right now.
So Joe, question for you, rapid fire. Coverage intent different than insurance plausibility. We understand that. The newer policies are not intending to cover PFAS. You spoke about the tightness of the exclusions. Could there be an avenue to pierce those exclusions through the product coverage of a general liability policy specific to claims involving water utilities based on bodily injury arising from the consumption of that product?
So it's going to depend on the way the PFAS exclusion is written. From what we're seeing right now, they're taking every belt and suspenders approach possible. So it's going to be like arising out of, relating to, directly or indirectly, and have very broad prefatory language. So the answer is probably not, but it's worth considering.
Okay. Are there limitations to sovereign immunity for public water entities, whether it's cities or water utilities, regarding PFAS? Joe?
I'm going to have to defer on that question. Unfortunately, we'll have to bring back Willis for that question because I don't know the answer.
Yeah. So what we'll do for the leadership group is we'll then provide an answer. We'll put it on our webpage so everyone knows what the opportunities are, what the parameters are. Another question, Joe, for you would be the litigation that you're seeing with PFAS. We understand that there are exclusions on the newer policies. It prevents, in many instances, the declaration of coverage, mostly on disclaimers. But there are also causes of action that are unrelated to the PFAS contamination itself. There could be negligence. There could be a variety of different causes. Are you looking at those causes to trigger a defense obligation, using that as a cudgel to start the negotiation on behalf of your clients to at least get the insurer to reevaluate and possibly bend on the position of PFAS and coverage?
Yeah, absolutely. And that's a very critical point. And the law in most states is that if there are any allegations in the complaint that are potentially covered, then the insurer may have to the obligation to defend the suit in its entirety. So we're looking very carefully at all of the allegations to see if there are any allegations that we can point to as potentially falling outside of, for example, the pollution exclusion.
Agreed.
Okay.
Yep.
Richard, did you want to make
I just said I agree.
remark?
I agree with that. Yeah, that's exactly right.
So I think for the group, before we have Vlad finish up with his comments, I can tell you from the insurance industry, we do not intend to cover PFAS. This is on newer policies. This goes back to Richard and archaeology and trying to mine those older policies. Those will be coverage rich with PFAS. But the newer policies, you're going to have to hire a hired gun, an advocate, to essentially argue that there is a tie, because with insurance law, tie goes to the policyholder. And if you can get it to a tie, you can start negotiating with your insurer to hopefully either continue the defense, threaten is the wrong word, but motivate them to comply with the Unfair Claims Settlement Practices Act of the respective state, and ultimately get to a situation that properly protects the policyholder, your utility. But again, the solution is to retrieve those past policies. Vlad, final remarks?
Yeah, Paul, Richard, Joseph, thank you so much for being here, and thank you for presenting your expert opinion on how to navigate the complexities of PFAS claims, highlighting the value of diligent insurance archaeology process, and providing practical insights on how to manage that. Final remarks for our agencies: whether you are currently facing PFAS-related challenges, such as our last webinar presenter from Yorba Linda Water District that had to deal with ways to remedy and remove PFAS, or you are preparing for future exposures, we hope that this webinar helped to guide you through this process and equipped you with knowledge and tools to effectively manage those emerging risks. We are going to be providing additional information on the website, posting this video and answers to the questions that weren't answered today, and we'll be having further discussion at our next open forum in October. Thank you very much for being here. We really appreciate your time, and looking forward to further discussions on this. Thank you.
Thanks for having us.
Bye-bye.